Wednesday, September 13th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at what they don't tell you about inflation at the Ivy League and also at Oxford, Cambridge, or the LSE. And you can do this experiment at home. I've done it this morning, and I'll show it to you. But before we kind of look at inflation for dummies, and I'm not trying to insult anyone, we're going to look at what a few people back in history said about inflation. And the one that's really interesting is John Maynard Keynes, what he said about Lenin and inflation. And he said this in The Economic Consequences of the Peace, a book he wrote, I think, after World War I. So this is what Lenin said. This is what Keynes said. Lenin is said to have declared that the best way to destroy the capitalist system was to debauch the currency. By a continuing process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. By this method, they not only confiscate, but they confiscate arbitrarily. And while the process impoverishes many, it actually enriches some. The side of this arbitrary rearrangement of riches strikes not only at security, but also at confidence in the equity of the existing distribution of wealth. Those to whom the system brings windfalls beyond their deserts and even beyond their expectations or desires become profiteers, who are the object of the hatred of the bourgeoisie, whom the inflationism has impoverished, no less than of the proletariat. As the inflation proceeds and the real value of the currency fluctuates wildly from month to month, all permanent relations between debtors and creditors, which form the ultimate foundation of capitalism, become so utterly disordered as to be almost meaningless. And the process of wealth getting degenerates into a gamble and a lottery. Sounds familiar? Gambling, lottery, speculation, stock market, derivatives. Lenin was certainly right. There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction and does it in a manner which not one man in a million is able to diagnose. So that's what I've been trying to do here on this channel since late 2015, is try to wake up the rest of the public, not just one man in a million. Hopefully we can make it, 500,000 will notice, and then they'll be in trouble, of course, the government and the central banks and the banks that really are part of the system. The other quote I wanted to come up with, and I've come up with this many times, but for those of you who have been following me, you should know this by now, but this is what Felix Sommery, the Raven of Zurich, a banker from the late 19th century, early 20th century, said. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So, I'm going to focus on the UK. There's a couple of articles I just wanted to show you, and then we'll go to my experiment. I think you will like it, and hopefully that experiment will kind of wake up people who still believe in what they're told about inflation by the government, by the central bankers, by economists, by the mainstream media, and realize that they're not being honest with you. But, okay, so I saw an article yesterday in the Telegraph, size of public sector biggest in a decade after NHS and civil service hiring spree. Increased public sector and employment coincides with rising levels of pay. And I want to specify, am I denigrating the NHS, the people who work there, or even the civil service? No, because you're only pawns in the big game. But what this says, though, and I'm not going to go through the whole article, is that the public sector is growing much faster than the private sector. The private sector we've seen today, we've had data for GDP, and GDP actually includes government spending. GDP dropped 0.5% month on month in July. It was flat, so no growth in GDP year on year in July. So the UK economy is, for all intents and purposes, in a recession. We still have high CPI, which is called inflation. But that's why I don't like to call CPI inflation. It's the consequence of it, of course. But yeah, this article just goes to prove that the government is not doing the right things. It's focusing on the public sector. It's not trying to streamline the public sector, focus on the part of the public sector that's really needed. We do need to have the NHS run, like it or not, because people are getting older and they need good service. I suspect there's a lot of waste in other areas, and that's not what I'm trying to do here. That's maybe for an auditor to go through that, independent auditor, but I'm sure that's not going to be done. But one interesting thing here is what this guy here, Tony Wilson, director of the Institute for Employment Studies, this is what he said. This points to two big challenges for government. Too many people are outside the labor force entirely, but those that are looking for work are finding it harder to get it. So we need action on both fronts to help people start looking for work, but also to get much better at helping people find it. So this guy, Tony Wilson, despite the fact that the public sector and the bureaucracy is getting bigger and bigger, and according to the data here, there's 5.9 million people working in the public sector. I think back when Britannia ruled the waves, the British Empire, I think there are only 5,000 bureaucrats running the whole empire, where the sun never set on the British Empire. So it was a mean, lean empire. Yeah, mean and lean and efficient. And it only had 5,000 civil servants. And now we're not an empire anymore, and we got almost 6 million people working in the public sector. And the reason I'm showing you this article is because this is not going to improve the inflationary situation, and I'll come to that in a minute, of course, with my experiment. The other article that I wanted to show you is this one here. UK, from the FT from yesterday. UK wages grow at 7.8% despite slowing jobs market, and despite an economy that's in a recession, really. Average pay now growing faster than inflation, reinforcing Bank of England's concerns. So a lot of this pay boost is coming from the public sector. NHS workers and civil servants are getting big pay deals. They've gone on strike, and I think they're going to go again on strike. But this is the comment that I thought was interesting. And I'm quoting here Sarah Breeden. She's the Bank of England's incoming Deputy Governor for Financial Stability. And this is what she said yesterday. The challenge right now is that wages are high and are rising, and then that there is a real risk that the second round effects mean that disinflation becomes embedded. So that term there, second round effects, I'm going to come to that in a minute. So let's get to the experiment. So I've taken a picture here earlier today of these 4 glasses of milk. As you can see, one is full we like full fat milk. The other one has half the amount of milk. The other one has a quarter the amount of milk, and the other one has about an eighth. And I've got here a a jar or a jug of water, and that jug of water, you can think of that as the Bank of England. Yes, with all the liquidity, right? All the funny money currency. And the milk, the 4 glasses, you can look at it maybe through time, maybe 1914, before we went off gold, when we had sound money, we had real sound money there. The milk was always the same. The gold was always the same. The silver was always the same. You couldn't really dilute it. You could try to debase it, but people would notice it, and they never did, of course. And then after that, I've emptied some of the liquidity into the glasses, and you can basically say that the other glasses are through time, right? Maybe every 30 years you put more water into the glass. And you notice that the 4th glass doesn't look the same as the first one, but the 2nd and 3rd look very similar in color. And now I've added a 5th glass where I put very little full fat milk, and I put the water in, and now you can see the difference. You can see that the color's not even close to being the same as the first glass. Doesn't taste the same. And when Sarah Bradeen talks about second round effects, what she means is that people are starting to notice that this is not real milk. It's only got a little bit of milk, and it's not the nice milk, which I'll have a sip of. Let's try the diluted milk. It tastes like water. So this also helps explain John Maynard Keynes' quote that he says that the process engages all the hidden forces of economic law, right? Because the 2nd and the 3rd and even the 4th glass, they look very similar, but once you taste it, you can see that it's not the same. And the people who taste it are the people who work. So it's very simple, isn't it? The Bank of England has the liquidity. They dilute the currency. And where does the milk that's supposed to be here go? Well, it goes into the government coffers. And from there, it goes to the people that helped elect those politicians, big business. It could be also on the labor side, it could be the unions. And I've heard that labor wants to, in the first 100 days, they want to give more power to the unions. Is that going to help you in the NHS or in the public sector? Is that going to help you in the private sector with your wages? Is it going to buy more? No, because the Labour Party are going to do the same as the Tories. They're going to keep diluting the currency. And one day, maybe people will notice that there's no milk left. And yeah, that's when you get hyperinflation. And that's what they're not going to teach you at the Ivy League, at Oxford, Cambridge, or the LSE, or any other economic, any other university where economics is taught in undergraduate, as an undergraduate degree or master's or PhD. They won't teach you that. So it's very simple. So they try, of course, the powers that be. And why don't they teach this in schools? Well, because people would wake up and realize that the system's not fit for purpose. And it would hamper government. If we had sound money like gold and silver, government would be restrained from doing a lot of what they do today, because the only way to get funding would be through taxing a lot, and then people would have had enough. And borrowing in a sound money system, borrowing too much, will show up right away. So this is what the QE has done, and it's of course started like many decades ago, disinflation. But the QE, I would say, and what's happened since 2020 is starting to show. It's starting to taste like water. And that, my friends, is inflation. So when they give you all these excuses, when they say, package holidays increased inflation, wages increased inflation, second round effects of higher wages increased inflation, Putin is to blame for inflation. They're not really being honest with you, or maybe they're just ignorant because they've been conditioned to believe that the consequence of inflation, which many times can also be lower prices, because we're seeing lower prices for housing, but the consequence generally is higher consumer prices. So they use the consumer prices, or the CPI, basically to manipulate and deceive you. But don't be fooled. And how do you protect yourself against inflation? When you're in a fixed income, like pensioners, but I've seen that pensioners are going to get, they're supposed to get 8.3, but they're going to tweak it to 7.3. And why do they get such a high increase? Well, because the genius George Osborne, who was the Chancellor of the Exchequer, he came up with something called the triple lock that said that the minimum increase for pensions would be 2.5%, or it would be if CPI wasn't more than 2.5%, let's say, you'd still get 2.5%. And then he also said that if wages didn't go up by more than 2.5%, you'd still get 2.5%, but you'd get whatever all those threes, whatever was higher of all those threes. And CPI, of course, in the last few months was up at the 8% level, but they've tweaked it because they said, the wages went up because of public sector unions, but that's what it's all about. So I was saying, how do you protect yourself? It's very hard to protect yourself. There's no easy solution. One way to do it is to try to get paid in a currency that is not getting debased as quickly, and that's a difficult thing these days. Same thing's happening to the dollar. And longer term, of course, for your savings, you've got to stick to gold and silver. And some people might say, what about the price of gold and silver? Well, the price that we see traded every day, that's the price on COMEX or the LBMA, where the bankers use water to pretend that they use water to pretend that the price of gold and silver are not as high, but eventually it will come out in the wash and people will start drinking more milk, not water. So there you go. That's inflation. With that, let's quickly look at where the markets are this morning then. It's 8:20 a.m. London time. So we've got spot gold. That's trading at 19.10 basically. It's down about $3. High's been 16. The low has been 08. Silver's trading at 22.82. It's down 23 cents or 1%. The Dow futures is virtually unchanged. The Nasdaq future 100 futures up 19. S&P futures up a point. To the currencies, sterling, that's down 0.25%. 124.60. The euro's down 0.16%, 107.36. Dollar yen is up 0.2 at 147.32. The dollar's down 0.15 versus the yuan at 7.29. There's been news that the Chinese government or the regulators, banking regulators there, are limiting the amount of dollars that the Chinese banks can buy. So maybe that's why the dollar has come off a little bit. The Aussie dollar, that's down 0.25 at 64.10. The dollar is unchanged versus the Canadian dollar, 135.59, and the Kiwi dollar is unchanged, just below 59. And someone asked, why do you do the Kiwi dollar? Well, I have a lot of viewers in New Zealand, so we cover that. Let's just quickly look at the ruble. So, the dollar's down about 1% versus the ruble is trading at 95.48. So let's check the commodities, general commodities. WTI crude is trading 88.55. That's up 0.25%. Brent is almost up to 92. That's up 0.2% at 91.89. Platinum is trading around 908. It's down about $3. High grade copper is up 0.1%, trading around 380. So let's check the bond markets. Let's check the 10-year yield. Well, that's at almost at 430, so it's up 3 basis points. I saw that Jamie Dimon thinks the 10-year yield could go to 5.5%. I don't disagree with him. I think that could be by the end of next year. I don't think it's going to be this quickly. It's going to go up this quickly. Let's check the UK bond market. The 2-year gilt yield is at 5.10. It's up about 7 basis points. The 30-year is trading at 4.79. So not much change there. So with that, I'm going to wish you all a very good day. Take care. Bye.